Hello traders, welcome back to my channel. My name is Mr. RainFX, and today I'll be touching on the complete beginner basics. You don't need knowledge to know this, but I promise you by the end of the video, you will be able to read candlesticks, you will be able to study them, you will be able to know how to trade them, you will be able to understand why are they in the market. And without wasting no much time, let's get started. And if you are a total beginner or someone who's been struggling, or maybe you are an advanced trader and you want to understand more about candlestick, this video is for you. So let's get started without wasting much time. Kindly share, follow, and subscribe. If I may ask, what is a candlestick? It is a technical analysis tool that represents price movement of an asset over a certain period of time. Okay? They just show us how price moves and what buyers and sellers are doing in the market. And we have two types of them. Default one, we have bearish candlesticks, which is red, and we have bullish candlesticks, which is green. And I will explain more. As you can see here, this is a bearish candlestick, and this one here is a bullish candlestick. Okay? Nice. So now, let's talk about a bearish candlestick, what it is, and how and why does it been named as a bearish candlestick. Number one, we can say it is formed when the closing price is lower than the opening price, and it indicates sellers in presence. Okay? And what about the bullish candlestick? It is formed when the opening price is higher than the closing price, and it indicates buyers in presence. Then again, let's look at the similarities between the two candles. Number one, they both have closing and opening price. They both have wicks, as you can see here, these tails here, these and these. It has an open here and it has a closing price here. It has a body. It has a body. As you can see, they both, number one, they both have wicks. Okay. Number two, they both have highs and lows. Number three, they both have closing and opening prices, as you can see in the figure below. Okay. I hope that one is understood. And if you have any other question on clarity about the two candlesticks, kindly comment below on this video, and I will be able to attend to it as fast as possible. And with the knowledge that I have, I will be able to assist you with what you need. Okay, so let's go to the next chapter. Now, we have other candlesticks. Beside the two, we have other candlesticks, and I have categorized them into three candlesticks pattern. We have the single pattern candles, we have the intermediate pattern candles, and we have the advanced candles pattern. So, well, let's start with the single pattern candle. That means it is just one candle, and it also has its meaning. Number one, we have a bullish pin bar. A bullish pin bar might be green or red. So number one, it is a strong reversal candle. It indicates buying pressure. It indicates potential reversal to the upside. Okay? It indicates potential reversal to the upside. So features or characteristics of a bullish pin bar, it has a small body. It might be green or red, as you can see here. Tiny wick at the top, or almost to no wick, as you can see it here. A large wick below. This shows the price was dropping down, and then buyers came in and tried to push this price to here. That's why you hear me saying it is a bullish pin bar. Okay. Yes, and don't stress too much. Once you do your practice over and over, you'll get used to these candles. You will understand them more. You will be seeing them immediately once you open your chart. You'll be seeing them. Okay, let's go to the other one, which is called a bearish pin bar. Now, what is a bearish pin bar? A bearish pin bar is the opposite of the bullish pin bar. Okay, it is also a strong reversal candle to the downside. It is the opposite of the bullish pin bar, which indicates selling pressure. More sellers come in. Okay, nice. And what are the features of the bearish pin bar? It is a small green or red bodied candle. It has a small green or a red bodied candle. It has a tiny or no wick below. This is not above. A bullish pin bar has a tiny wick above, and a bearish pin bar has a tiny wick below. A large wick above. You see, it is just the opposite of the bullish. And this is the bullish has a large wick below. Okay? This how can we describe this? You can, in a simple terms, you can describe this as buyers were pushing price up, then sellers came in and tried to push the price down. Hence, it closed here, forming what we call a bearish pin bar. You understand that? Yes. And let's go to the next candle, which I can confidently say it is called a hammer candlestick. And someone might say it looks exactly like a bullish or bearish pin bar. Yes, it kind of looks the same, but it has a different meaning. And of course, it is a special type of candlestick, the hammer. Okay, what are the characteristics of the hammer candlestick? It has a long wick, just like a bearish or bullish pin bar, small body near the top of the candle, just like a bearish and a bullish pin bar, little or no upper wick. Yes, appears after a downtrend. Now here is the difference. This one appears after a downtrend. And the bullish and the bearish pin bar, we have not been told where specifically does it appear. But at the end of this course, once we finish all the beginner courses, you will understand and know where these candles appear. Okay? The hammer now appears at the end of a downtrend, now telling us the downtrend is over and buyers are coming in and they're trying to push price up to the opposite direction. Okay? And we also have we have the inverted version of this one, which is a red candle, which shows that now the uptrend is over and the sellers now coming in. But most of the people call it an inverted hammer. But inverted hammer or the hangman. But to make it simple, I normally say it is an inverted hammer. Okay, nice. And then in the single pattern candle, the last candle that I will talk about is the Doge. It represents indecisions in the market or equal energy between the buyers and the sellers. They are equal. Let's say you have somebody and you have equal energy and you try to push it other against the wall, and you guys, you're just fighting at the middle. No one has much strength than the other. That's how I can describe the Doge. It also has a small body like a cross, sometimes has equal wicks. It indicates a pause in the move. Buyers and sellers are equal in strength. And we have a couple of them here. So you can see this one is a common doji, a long-legged doji, a dragonfly, a four price, and a gravestone. Okay, so let's see that. So we have a bullish pin bar here. You see this? A bullish pin bar. We have another one, bullish pin bar. We have a bearish pin bar. You see this? We have a bearish pin bar. You see this? Looks exactly the same, almost the same. And again, here is the doji. Here is the doji candle. You see how it looks like a cross? And again, here is another doji. You see what I was talking about? Let's see an example of the hammer. You see, this was a downtrend. Price was trending down, and then the hammer appears. As we read before, it appears at the end of the downtrend. You see, the price was trending down, and then the hammer candle appears, and then price started pushing up. Do you see how the candles now tell stories? Yeah, they tell nice stories, nice and beautiful stories. Okay, let's see what we see the gravestone. Let me just see if we can have examples here in the chart. This is a gravestone candle. This one here. Another doji. Another doji. We have a lot of dojis in this example. This is a bearish pin bar. So we have two types of candle, as we said, the recap. We have a green candle and a red candle. A red candle, you see it represents sellers. It has a body, 2 weeks. Here is the opening price at the top, and here is the closing price. Here is the opening price at the bottom, and here is the closing price. The difference. That's the difference. Yeah. So let's go to our intermediate candlesticks. We have a bullish engulfing candle, and we have a bearish engulfing candle. What is a bullish engulfing candle? Let me show you in the chart. A bullish engulfing candle is where a small red candle is being engulfed. It is being covered by a large big green candle. Okay? A bearish engulfing candle, it is a small green candle which is being covered by the large red candle. Let me show you in the chart. So number one, let's start with the bullish engulfing candle. Here is a nice example of a bullish engulfing candle, a small red candle being engulfed by a green candle. Okay, this is a nice bullish engulfing candle here. Where is a bearish engulfing candle? It is a green candle being engulfed by a red candle. So let's say this one here is a bearish engulfing candle. These two. That is it. With a bullish and a bearish engulfing candle. It is a two-pattern candle. Okay? It's only a two-pattern candle. So let's go to our next topic and see what it entails. We have the advanced pattern candles. And I chose two. Of course, we have a ton of candlesticks out here, but these are the most common ones that are being used by almost every trader. These ones are the most common ones that are easy to find and easy to trade. Okay, but you can also do your research and check more on other types of candlesticks you can have outside here. Okay, for me, I wanted to simplify this information. I've been training for this information for over 4 years now. So I wanted to just share a clarity of how candlesticks works and which one mostly should you look at and which ones mostly you should ignore actually. And I'm sorry to say ignore because you can't see all of these candles in the market. You just trade a few and you'll get used to a few of them. So let's continue. We have a morning star pattern. A morning star pattern is a candle. It is a bullish reversal type of candle, which happens at the highs and the lows. The highs and the lows, I will teach you that later. But for now, I want you just to understand the pattern. It starts by a big first candle. It has a three-pattern candle. The first pattern would be a big red candle. And then the second candle, it might be a doji or a pin bar with it might be either green or red with a small body. The next candle is a green candle which engulfs the doji. Okay, or also this a small candle out here. Here the doji, morning doji star, and this one is just the normal morning star. So if this one engulfs the red gun, it shows that the movement is strong. Okay? If it doesn't engulf also the red one, it shows that the movement is not that stronger. Okay? Yeah, don't get too much into that. I just want you to understand the pattern. Okay? We have an evening star pattern. It's just the opposite of the morning star. So we have a green candle with a good body, big body enough. And we have a red candle which has a small body, as you can see here. Okay. And then the red candle comes in and engulfs the whole of these three. Just take it like the way the sun sets and rises. Okay. So the sun rises, we call it morning star. The sunset, we call it evening star. It's just like evening star is going down and morning star is going up the way the sun does. Okay, nice. So let me show you some example of the morning and evening star pattern. So we have one here, but even though the market had a gap here, but we have one here. This is the morning star. We had a green candle. In short, price was trending down. Then price turned around. We had a nice big green candle with a big body. A red candle dropping with a big body, strong big body enough. And then a green candle appeared with a small body. Then the other green candle came and engulfed the rest of this pattern. Okay. This is now we call a stronger morning star. So let's try to look at the evening star. This is the evening star. We had a green candle, price was going up, and then we had a small candle, which a red candle, it might be red or green, where the red candle came in and engulfed the whole pattern, forming an evening star. Yeah, another example is here. We have another morning star around this zone. Price was dropping. We have the green red candle, then a green doji, then the green candle comes in and engulfs the whole of this pattern. Nice. Okay. Let's see if we can have one evening star. So evening star, the good example is this one. Price was trending up and we have a green, nice bodied candle. And then the next candle might be green or red, might be a doji or any other candle, but small bodied. And then the red candle comes and engulfs the whole pattern. Do you see that? Yeah, perfect. Now, once you grasp that, and this comes with a lot of practice, of course. If you don't practice, you won't get it. If you practice, you will get it. Okay? Nice. The next topic, which is time frames. What is a time frame? It is a specific period each candlestick represents on the chart, ranging from seconds to months. It helps trader identify trends, chart patterns for various styles like scalping, which includes 1 minute, 5 minutes, 10 minutes, 15 minutes, 45 minutes to the hour. Day trading, which uses hours, also minutes. Swing trading, hours and days, and long-term frames offer clear trends. Long time frames offer clear trends. We have common time frames like short term, which is minutes or hours, medium time, which is hours or days, long term may be days, weeks, or month. Okay. So let's say once you become an advanced trader and you want to be a scalper, which time frame would you use? Number one, if you are a scalper, you can use 1 minute or 5 minutes. For short and quick trades, 15 minutes, 30 minutes. Day traders who trade during the day, hold trade during the day, may use 15 minutes, 1 hour, 4 hour, and etc. Swing traders, they focus on the 4 hour, the daily, as they move on. Position traders, these are traders that use large time frames, big time frames like the daily, weekly, monthly, and as they go forth. Here's a small diagram of the time frames. The time frames are found here on your trading view. So we have the 1 second, 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, day, week, month, one range, as we go like that. So let's see that in our chart. So this is our time frame here. All these are the time frame you might want to use. We have 10 range, 100 range, 100,000 range, one range. This is like an year. We have months, days, weeks, hours, 4 hour, 3 hour, 1 hour. As we continue like that, we have minutes, 45 minutes, 30 minutes, 15, 5, 3, 2, 1. We have seconds, 30, 45 seconds, 30, 15, and of course, I don't know if someone can use seconds to trade, unless you're a machine and you have ticks. You have 1 tick, 10 tick, 100 tick, 1,000 tick. So this is our time frame on top here. It just tells us a story. If you go to 1 hour time frame, this candle opens and closes after 1 hour. If you go to the 4 hour time frame, this candle here represents the 4 hour. It opens and closes exactly after 4 hour. So let's see. Let's just mark it. When did this candle open? Let me just remove this. This candle opened exactly at 2. So this one closed at 22:00 and this opened at 2 a.m. So 22:00, that is 10 p.m., 11, 12, 13, 14. Those are 4 hours before this one opened. So if you go to the day, this candle took a day to be formed. It took a day, it opened and took 24 hours to be formed. It represents a day. When you go to a month, then this candle took the whole month. This one candle represents 1 month. When you go to 6, like that, this one represents 6 months. When you go to seconds, and again, this candle represents 1 second. Okay? Yes, nice. This candle represents 1 second. 1 second. 1 second. Very, very, very important. Yeah. So that is the topic of today. I wanted to briefly take you through the candlesticks. And the next topic, I will be looking on support and resistance. What is support and resistance? Now, incorporating support and resistance, joining them together now to form candlesticks. Now bring us to support and resistance, and that will be our next topic. The other next topic will be supply and demand. The other next topic will be structure. The other next topic will be fair value gaps. And again, after that, we'll come and touch on trading view. And after you guys, you grasp all this, I will now teach you how to install and use MetaTrader 5 to put on trades, place your trades, and do now what traders do. And I hopefully we will reap this money together. So, but before that, I encourage you guys to do more practice. I encourage you guys to study, learn these things, put them in practice. And if you have any question, just comment below. I'll share my email and my WhatsApp number. You can contact me directly. Send me a WhatsApp number for any question that you have, and we might want to go through. We can jump on a Zoom call and start to have the 1, 2, 3 thing with you and make you understand what I'm talking about. Okay. So the next video, I'll be helping you to point out the mistakes beginners make. And please, I urge you all to subscribe to this channel, comment, follow, and share with your friends so that algorithm, sorry, it helps with the YouTube algorithm, and also it helps to boost my content so that I can have the energy to now produce more content like this for you guys, to make you understand. And I really appreciate all of you for being here. I really appreciate all of you for taking your time to go through my videos and see what I'm doing. Thank you guys. I'll see you on the next video. Thanks.